Good afternoon, guys. It's the 20th of January 2018. Just going to send out a couple of charts for you to watch. We're just going to start with the dollar index and then move on to the euro, followed by the Japanese yen, and then to pound Aussie. Just so that some of you guys that actually do follow on YouTube will get an idea of what we actually do in the Lifestyle Traders Club and the kind of content that will be covered in our courses. So dollar index, we're sitting here on the monthly chart. Just going to pull our fibs in. The way I use fibs is slightly unconventional in terms of we do it back to front, and it's not that it's for a particular reason, in the sense that the numbers will still be the same as the conventional method. They're just inverted. It's just when I'm looking for my extensions, rather than it being a minus 27, I see a positive 127. It's just personal preferences, that's all. So we've brought our fibs in, so that means we have to draw it back to front rather than low to high. And what we're looking for is correlation with structured levels. So things that will jump out to me will be this zone here, okay, and this zone here. So we've got a nice little correlation. What I'm going to do is I'm just going to make this zone around the whole numbers. So it's going to be 93 and 92. They're not random. I'm looking at the numbers to the side and they're overlapping with the fib. Likewise, what I'm going to do here, we're going to overlap the numbers and just make them so we've got the zones between the big numbers, because you'll find that the markets, especially with the dollar index, they do respect these big even numbers, even handle, whatever you want to call it. So what do we notice? From being a relatively strong dollar, we've seen a correction with a lower high on the monthly. We've now broken through the 618 and the 92 even handle. And the next stop is going to be the 50% barrier down towards 88. The question is, are we going to see the market move in a straight line like this? Or is it going to go up like this and then back down? Now, we can have a plan for either way. The question is, if it's going to continue straight down, then effectively we're just looking at selling dollar. If we're going to have a retracement back into structure, then there'll be opportunity for short-term long dollar, followed by the sell-off and looking to sell dollar. So depending on your trading rules, are you trend traders, or will you take contrarian trades, will be dependent on how you actually trade this. So now we've got this sort of fundamental or technical bias, I should say, in terms of where we see the US dollar moving. Let's go down to the euro dollar and have a look at what we've got. So you can see I've already put in short here and long here. These are something that we highlighted previously, so I'm just going to get rid of some of the drawings so you can see why they're in. Okay, this line in here, big even number 115. Now, the trend line that was drawn in, when you draw trend lines, you have to be consistent in your method. So if you're going to use the tip of a wick, go to the next tip of the wick, so this point here. So you'd have gone to this one, then the market broke through it, so then you'd redraw, come to the second point, predicting the third and predicting the fourth, which we just hit. Now, the other method of drawing your trend lines will be using something called a line chart. And you can see how it slightly varies. So you'd be using the tip of this wick here, this peak here, this peak here, this peak here. And your trend line will be slightly different, but again, it'll be a consistent method because you're using the same highs each time. And vice versa, if you're looking for the lows, whether you're drawing horizontals or trend lines, you'll be using the same method. So one of two methods. One is using the tips of wicks, and one is using the line chart as I've just illustrated there. So let's take it back to a candle chart, because this is how I draw my trend lines. And we'll see that the market came in, let me just remove that. You'll see the market came in and tested the monthly trend line for the fourth time. The question is, are we going to get a sell-off now? We are currently short this market. I'll explain why in a minute. And we'll just remove that as well, so it's a little bit clearer, and we'll get rid of that. So we've seen price come into our trend line for the fourth time. So let's just break it down and drop down to the weekly and see what is taking place. So the weekly, we see that the market has So you'll see you'll get a slightly different picture with the trend line, in the sense that you see a little bit more detail. You see the double top in here where price failed. You thought it was going to break through and then came back in and retested. And now we've got a weekly shooting star at the trend line, which gives us more indication that the market is likely to drop to the downside. Now, what else could we look for in this same zone? Well, we always like to use our fibs, so let's have a look at our fibs and see what's being pulled in here. So first thing I'm going to look at is a fib from, bear with me, I was looking at the long-term fib, which would be, go back, so it's this here, we're going backwards from low to high. I'll just stretch this all the way across, and what we'll see is price is sat right on the 50%. And remember, if we look at the 50%, well, any one of these fib levels, we're looking to see where structure correlates. So let's just squeeze it back in, and if we go to the 50%, I'm just going to draw in a horizontal line at the 50%. So if I put that through there, can you see how price tests here, and again through here, and currently where we're sat right now. So this is a significant area, and remember, because the markets are random, it's very rare that you find something hit to the exact pip. So I don't like to use specific horizontals. I'll always use a zone, so that's why you'll see these red box. So around that 121, I'm looking at that zone effectively there, and if I drew it all the way across, you'd see the previous structure that we were looking at. So within this area, what are we looking for? We're looking for opportunity to take the market short initially, and then potentially for a next leg up to go long. So let's have a look at our potential opportunities and how we can take advantage of this. So first thing, let's just drop down to the daily, and what we're seeing is we're seeing a consolidation. Just zoom in a little bit. So this is effectively, you've got accumulation and distribution taking place, where we've got a battle of buyers and sellers trying to take control of the market. The fact that we're at resistance also indicates that my bias would potentially see this market drop to the downside, and the reason for that is based on history. I'm not going to talk about the commitment of traders right now, but we do have a commitment of trader extreme. So they're looking for shorts. Now, this is where I'll be looking at the smaller, more intricate cycles and looking to see if we've got any sort of fib extensions popping into the same zone. So what we'll see is, we'll see that the fib 1.618, the golden ratio, comes right in at the trend line and the tip of this wick where the market stopped and reversed. Now, this is probably going to be a little bit aggressive for traders to take based on just what we're seeing there. So it's about looking for opportunities within this space here on how we can trade it. Now, let's go down the time frames again, and what you'll see is a reversal pattern taking place. Now, for the aggressive traders, there's this pattern, the head and shoulders. So what you can do here is you could forecast trading the right shoulder based on the left shoulder if you thought this was an area of the market, if you thought this was an area the market was going to reverse. So you would have something like this. So you'd get your left shoulder, which is about there, bring your stop in above the head, and where you predict the market is likely to move to. So we've got a forecast target around 120.75 to 121. So let's pull it into the big number. So that's what we'd be looking at there. Let's bring it across so you can see what we're talking about. And based off that, that's a risk reward of 4 to 1. Now, that was one opportunity to get in. Now, something that we sent to our Lifestyle Traders Club as well was a break of this trend line here, which, if I just put this in, we're looking at this here. We had the rejection candle, a sell-off, So this one gave you a slightly different entry technique and slightly different risk profile, something like that. We pull that into the 121 and you'll see that gave you a 2.58 to 1 potential reward on your trade. Now you're probably going to ask, why am I saying 121? So let's just zoom out a little bit. In fact, let's put it back to the daily chart, because once we find an area to go short or long, we always want to know where the next sort of structure level could be in order for the market to basically bounce for exiting. So the exit would be some, let's just get rid of the fibs now. So first thing we see is this bit of structure here. See another little bit of structure here. We also notice we've got a big round number, and if we bring in our fibs, let's do the whole move and then parts of the move, just see if we can find any correlation. So 618 comes a little bit lower into the 120.50. Here, if we come to the next impulse move up, the 618 comes perfect into the 121, and again if we take the next leg up, the 38.2 comes into about 120.75. So you've got a fib overlap in the little region there. So therefore, this is the zone that I want to be taking my money off the table. And this coincides and correlates with exactly what we're seeing on the dollar index. So a sell-off in euro would be, remember, the short-term rally on the US dollar. So a rally on the US dollar would mean a sell-off in the euro into 121. So this is why I'd already got my shorts here and my longs here already highlighted. They've just moved with the time frame. So that's the euro planned ahead. So dollar yen, we've got this already planned ahead, but let me just remove these so you can see what we're looking at. Okay, so I'm going to go up to monthly chart. Again, something very, very similar. Things that we're looking for, points of structure. We're going to take the major fib from high to low, which is this point here, down, and we're just going to look at the fibs that correlate. So let me just move it across so you can see fibs that correlate with the structure. So the first two that we see are going to be this one here and this one here, specifically overlap beautifully with structure. Now we've got 114 sort of 50 down to 114, so let's just change this, give it a 50 point zone. So this is where we're looking for a potential swing in price to move, let's say, to the upside if we are fortunate enough for that to happen. Now the next thing will be, where can it move and what other structure points do we see? So something that I see personally is this descending trend line here, and again we're using the tips of the wicks. So we've got a descending trend line there. Other thing that I see here is the ascending trend line from the lows to the highs. So basically this market is moving into a tighter space. Okay, so this is something that we want to have a look at on a smaller time frame to see if we can see any of the structure points on how we can take advantage of this market. So let's drop down to the daily and see if there's anything that stands out. Okay, so first thing in terms of structure and big numbers, well, we've got the 111 here that we saw the market dance around, which essentially is coming off a fib number as well. So we've got 111. I'm just going to put this in. But the other thing that I see is this zone here. Okay, can you see that? Through 112 to sort of 112.25. So I'll just put this little zone in, and if we drag it all the way across, we'll keep it nice and tight. if we are going to see what the dollar index is predicting, or what I saw on the dollar index, we're either going to see the market rally into this zone for short-term dollar strength, and then see the market correct down towards 108s. Now, in terms of 108, why do we look at that number? Well, let's just squeeze the data in. And if we look at our fibs from, I'll do it from all the way over here, but it's just so you can see exactly where we're looking at. And just bring it all the way across. Can you see how the 618 comes right in at this 108, 109 number? Sorry, 110, 111, and then the 50% comes in at 108, 109. So I'm going to stick another one of my zones in through this point here. Okay, so I'm just going to remove the fibs so that my charts aren't cluttered, but you'll see we've got the midpoint here at 618, which is the 111 number. We've already got that zone drawn in, so I've taken that off. So the way we're going to look at trading this market is a couple of ways. So short-term dollar strength, we'll see price rally into this zone here, where we'll be looking for short trades based on entry rules. This will be dependent on your style. If you'd like to know how we're going to do it and how we will take advantage of it and keep you informed, well then that's obviously part of the Lifestyle Traders Club. You'll get daily webinars, daily instructions, and daily trade alerts, not just on the bigger time frames but also on the smaller time frames. Alternatively, it could just come straight down into this zone like we're seeing here, and should it do that, then we'll be looking for the continued sell-off and then the next move that we sort of predict and forecast will be a move from that area into this direction. So there's going to be multiple opportunities over the next few weeks and months for some very handsome returns just on the euro and the dollar yen itself. Okay, the next market we're going to have a look at will be the pound Aussie. You can see I've already got some zones highlighted out here, but I'll just get rid of these and start afresh so you can see what we're looking at from the higher time frame. Okay, so let's just pop up to the weekly. So something that we see here is this broadening wedge. I'm just going to draw in simple trend lines that we can see through here. Okay, next one we're going to see is based off an anchor, which is there like this. So we've got the anchor followed by the first peak and the second peak, and you can see that there's probably some way left in this market yet to go. You can see on top of this we've got a nice structure point that the market reversed from and sold off, but yet there's potential some momentum left in this market. We're seeing bullish moves from sterling, so what I want to do is I'm just going to bring this down and see where our extensions come in. And if you look at the 1272, look left, you'll see structure, structure, structure. Remember, structure always leaves clues. So we'll bring that across. That's our target. So you can see we've got 185, nice big round number. The question is, how can we look at taking advantage of this trading opportunity? So the market's come down, it's rejecting the 618. If we look left on the 618, there's structure there as well. So I'll just draw this in so you've got clarity in terms of what I'm talking about. Structure, you've got resistance, support, a little bit of mess here, and then again we get resistance, resistance, and support. Remember, this is the midpoint of the broadening wedge, so it's going to be a little bit more tricky in terms of getting your entry right. So let's just drop down to the daily and see what we can see. So if we drop down to the daily, what we're seeing is an accumulation, a stuttering and stalling. We know this is the 618. We see some bullish momentum, and then we see some stalling again. But does that leave us any clues? Can we see anything on the daily? And really, it's a little bit messy. So first thing I say is always have a look and see if there's any more clarity when we go into the chart in more detail. So if we look at this, what I'm seeing is this. So a couple of ways you can look at trading this potential market. So for the aggressive traders out there, we'll be looking for long trades based on the right shoulder with stop loss below the head, and then we're gonna have to bring this all the way down because we need to try and target 127, which is all the way up here. So that's a 9-to-1 based on that information there, and that's targeting 184. The alternative to this trade, because this one's the most aggressive, so you could look at this on a smaller risk profile. The alternative to this trade would be wait for the head and shoulders to be confirmed. So let's just move this out, and that would be basically looking at this zone here, wait for a close above this area, and then what we're looking for is the market to basically move up in this direction and then pull back, and we'll be looking for long trades from this point. And depending how the market is, your sort of risk reward profile is going to be something along these lines here. And then let's just pull that in so you can get a real idea of targets. So that's going to be a 6-to-1. This one wouldn't be as risky, and the reason it wouldn't be as risky is because you've had a confirmed change in trend on the smaller time frame. Another way of looking at this in terms of confirmed change in trends, so I just go back, I was thinking ahead of myself there, is you can look at this short-term trend line which the market has now broken. So we've seen short-term trend line break, it's retested. So in theory you could be looking at longs now. The choice is yours. Remember, this is just technical analysis. We've not given you the setups, we've not given you the entry points or the management, but we wanted to give you, and we will continue giving you, some free analysis, free ideas. But here at the Lifestyle Traders Club, what we want to show you is what you would be involved in. The Lifestyle Traders Club offers 6 webinars a week. They're Monday evening, Tuesday evening and Wednesday evening, 8 PM till 9 PM. We also have intraday sessions which run from Tuesday, Wednesday and Thursday, 8 AM till 9:30 AM. And then we've got 2 private trading channels that operate 24 hours a day, 7 days a week. One giving you end of day trades, which is a separate channel, and another one that gives you all trades, intraday, swing trades, etc. These channels operate and are one-way channels, so there's no communication there, only coming from the senior traders and head traders of the Lifestyle Traders Club. We also have a private members Facebook group. This is for your implementation, so you can practice exactly what we're teaching, and share ideas with group members alike. If you would like to be a part of the Lifestyle Traders Club, then it's very simple. Just click on the link in the comments below, and we look forward to seeing you. If you're still uncertain and want to meet some of the members, or would like to meet myself and my other head trader Jonathan, then all you need to do is register for our free event. If you would like that, if you would like to know more details on the free event, email mark@tradeandtrain.com. So that is email mark@tradeandtrain.com, and I look forward to seeing you in the future. Okay guys, enjoy the rest of your weekend, and we will see you soon.